Hello, friends. Welcome back. I am here with a new video. This video is about accounting conventions. What is accounting convention? Accounting conventions are the guidelines that are to be followed while preparing the accounts. Are they legally binding on an organization? No. They are generally accepted by the accounting bodies, but they are not legally bound. They are not legally binding on the entities. We are not legally we do not have any legal mandate to follow these accounting conventions, but these are generally followed for preparation of accounts. While preparing the accounts, the first and most important accounting convention is full disclosure. That is, an entity should disclose everything while preparing the books of accounts. An entity should disclose each and every information which is important for the users to know about an entity. Sir, whether this full disclosure principle is so important, that will this impact the accounting convention of materiality? No. The second accounting convention comes to materiality. That is, we need to disclose full information, but that information should also be material for the users. What is material? Any information is material for the users only if, when we hide that information from the users, that information prove will that information will impact the decision making of the users. For example, I want to purchase shares of X Limited. I For purchasing shares of X Limited, I will read the annual financial statements or the financial statements of X Limited. While reading the financial statements of X Limited, I will assume that they have disclosed all the information which is relevant to me. Now, what X Limited should disclose? X Limited should disclose all those information which I should know when I would like to invest in X Limited. The information which I should know, or the prospective investor or all the stakeholders should know about an organization, is material, because hiding that information which I should know is not is in contravention to the accounting convention of full disclosure. So they should disclose all information which is material to the user, which if the user does not know, their decision, what they are taking decision regarding the organization, will be impacted. So we have covered two accounting conventions: full disclosure and materiality. The third and important accounting convention is conservatism. What is conservatism? Conservatism means being cautious. For example, if we are if we want to value anything for a business, and we have two values for that. One, for example, is 100 rupees and one is 80 rupees. So we need to take 80 rupees. We need to be conservative while predicting the values, or while predicting the revenue, and while predicting the expenses also. So what this conservatism principle says, recognize as much expenses you can, but recognize as less revenue as you can, because recognizing more revenue will overstate your financial position, and recognizing less expenses will understate will overstate your financial statements. In the sense, if you are recognizing less expenses, your profit will be overstated. So that does not allow that should not be followed while preparing the accounts. So while recognizing expenses, you should be more cautious. You should be recognizing more and more expenses which you are thinking may arise in the future. But while recognizing revenue, you should be more cautious, and only those revenues should be recognized which you are realistic for their realization, which you think that they will be realized in the future. Fourth accounting convention is consistency. What accounting policies you are followed while preparing the accounts, they should be followed consistently over the period. If you are valuing your stock on weighted average method, that should be valued on weighted average method on year basis. That should that should not be the chance that you are valuing your stock on weighted average method today, and for next year you are going to value that on FIFO basis. And any accounting policy which you choose to follow, or any accounting estimate which you choose to follow, that should be chosen on consistent basis. And the fifth accounting convention is cost benefit analysis. All the transactions should be recorded in the books of accounts, but a cost benefit analysis should also be done, that for that transaction what is the cost and what is benefit from it. If the benefit is more, then then the same should be uh, taken into account. But if the cost is more, the same may be ignored, because as per cost benefit analysis, the cost should be lesser than the benefit to be obtained from that transaction. So we have discussed five accounting conventions in this video. First is full disclosure, second is materiality, third is conservatism, fourth is consistency, and the fifth is cost benefit analysis. So thank you very much, friends. In case you have any doubts in this accounting conventions or accounting concepts, or anything which we are discussing, or any topic which you want that I should make video on that topic, you can please comment me. Please comment on the video. I will surely try to make video on that topic which you request or which you will suggest to make the video. Thank you very much.